webinar, which is brought to you by Shared Services Link in association with Tungsten Automation and Sovos. Today we're looking at where ViDA is heading, specifically focusing on government pre-filled tax returns. My name is Susie West. I'm the founder and CEO at Shared Services Link, and I'm delighted to be introducing as our two presenters today, Ruud van Hilten. Ruud is the Director Country Compliance at Tungsten Automation, and Christian van der Volk, who is GM Indirect Tax Tech at Sovos. It's great to have Ruud and Christian here with us today. So please do tap into their expertise. We will have ample time for questions at the end of this session. So jot your questions down, post those through to me as they come, and we will be asking questions pretty much in the order that they come in to Christian and Ruud in the last 10 minutes of this webinar. There's a lot of content in this slide deck today, so the slides will be made available to you after this webinar. You will likely want to share these slides with other key stakeholders who are involved in e-invoicing across your organization. So your tax colleagues, your AP and AR colleagues, your IT colleagues. There's a lot of content here for you to share. So please do go ahead and do that. Let's have a look at the context for today before I hand over to Ruud. So 2025 is pretty exciting, but we're coming up to an even more exciting and busy year with 2026 ahead of us. A lot of us are getting ready for Belgium and Poland, and of course we've got France going live or scheduled to go live September of next year as well. So we all have very, very busy agendas, and we're all moving at a clip. I think we all know that where we're heading here is by 2030, all EU member states need to be live with their national e-invoicing programs. And I think we're all cognizant of what the driver is here. It's mainly that nations across the EU and obviously outside the EU as well, they want to be closing their VAT gaps. So as governments are clambering to bolster their coffers, and they're not very keen to be increasing their taxes right now, they realise that they can add billions of euros to their coffers over a relatively short period of time by introducing national e-invoicing and e-reporting mandates. We're going to be diving a little bit more into the driver in a few slides time, but what we're really going to be digging into on this webinar is how far will the government demands go? How far will governments be extending visibility into your business process? So let's find out a little bit more about all of that. We'll talk about how countries are moving towards pre-filled tax returns, what you can expect beyond this, and what you can do to prepare. Over to you, please, Ruud. Okay. I just want to put you off mute, Ruud. You're on mute. So it looks like you're on mute. So let's just make sure that we can hear you. Okay, Ruud, we should be able to hear you.
I am on mute now. I was saying a warm welcome to everybody. So thank you very much for joining today. Christian, good to see you. Warm welcome as well. Yes, Susie, thank you for the introduction. I am indeed going to briefly talk about, first of all, the driver you just mentioned. Why are tax authorities going this way? Why is this happening? I'll also then introduce Christian after I've spoken about ViDA and some of the, let's say, deeper dynamics around e-invoicing mandates or CTC, whichever way you want to call them, that are at play and actually are really important for us. But before we go there, first to talk a little bit about these global mandates, and then specifically about the paradigm shifts we are seeing in the market. And that paradigm shift, that word paradigm shift, is actually very important, because what we are seeing is a massive shift from where we have been into a completely new situation where governments taking a very distinct, a very keen interest in understanding the tax on an invoice. So governments are literally coming into the financial supply chain between businesses. And as I said, they really take a very keen interest in those invoices that are being exchanged between suppliers and buyers. Why? Well, because they carry tax. And where that takes us is from a, I would say, fairly stable situation into high volatility. And I'll explain that a little bit later. But probably the most important element of all of this is that the governments up to today have been quite dependent on us telling them in self-assessment what our VAT, what our outstanding VAT return will be and our VAT filing is. Now we're moving into a situation where the government is quite a bit more omniscient than that. They know a lot about us, and in some cases they probably know more about a business than the business knows of itself. Also, the old strategy of risk management, where you weigh likelihood versus magnitude, and so you would look at to which extent you would need to comply. That probably is over, and we're looking at a situation where non-compliance is basically synonymous to non-existent. So we're looking at a very dramatic change over the next few years, and it's actually already started some time ago. But why is all of this happening? Why are governments so keen to get into that financial supply chain? So to give you a bit of background, and I'm not picking on any particular country here, but I am giving an example about Germany. And if you look at the title here, it says a shift from premium-based to tax-based funding. And what does that mean? Well, if you look at the aging populations in countries, of which probably most in Western European economies, we are looking at a situation where the population is aging fairly quickly, but also in the US, Japan, South Korea, and China, we see aging population. What does that mean? It means that the number of people who are dependent on pensions and specific provisions for them that have to be funded is growing very, very dramatically, to the extent that by the mid-2030s, which is only 10 years away, about 25% of all people in Germany will be 65 years or older, and then twice as many of them are seniors as there are children that are under 5, and that leads to a, call it a population bubble that is very heavy on the top end, or you could also compare it to a pyramid upside down. What that basically means is that pensions, specific services for senior citizens, become more expensive in the sense that they can't really be funded out of premiums. We all pay premiums of our salaries for later, but also from a solidarity perspective, we all pay premiums, and premiums up to pretty much today were sufficient to cover a large extent of the needed money to deal with old age care and pensions. And however, we're seeing that changing. We're seeing a change in the Netherlands. We're seeing that change in Germany. We're actually in a situation that the government actually needs tax money to fund these particular provisions, and that leads to a very particular situation that is directly linked to what I mentioned earlier. The situation where governments get involved in the financial supply chain and actually look to have visibility of invoices and the taxes on these invoices before these are even shared with the buyer. Now, governments don't really have many instruments to deal with situations as I was describing earlier, aging populations. And the fact that tax money is needed to fund pensions and old age provisions and services means that there is simply less money for other parts of infrastructure like education, like, for instance, infrastructure like roads, but also defense spending. We just agreed to spend 5% of our GDP on defense. Where does that money come from? And as I said, governments don't really have that many instruments to drive income, to drive GDP. And actually, if you are looking for money, and as Susie said earlier, the option to increase income tax or the option to increase the base rate of VAT is not very popular. It will probably cause you to lose the next election. But then also you need to see if it's really useful and if it makes sense to increase taxes, because if you look at VAT alone, which is typically about 30% of any country's GDP, if you look at that alone, there's a common denominator in Europe, which is the VAT gap. And Susie mentioned that earlier, which is the amount of tax, the amount of VAT that is left unpaid compared to the expectation that a country had, also known as VTTL, the total tax liability that is outstanding. And what we see there is very interesting. We're seeing that in Germany, that about 20% of that is not paid. So 1 out of every 5 euros in outstanding VAT is not paid. And that happens because of misclassification of transactions. It may happen due to administrative error. And unfortunately, quite a lot of that happens due to fraud. So you can increase taxes, but if you're not capable of collecting these taxes, you haven't really gained much other than political unrest. So what governments are looking to dramatically improve is the collection of VAT, collection of consumption-related taxes. And that is driving these CTCs, clearance or mandates, whatever you want to call them, again, where the government is enforcing electronic invoicing and national platforms for these invoices to be reported to. Now, while this all makes sense, policy changes, unfortunately, are very complex and sometimes are also very confusing. And I also always compare that to a very particular situation. This is a picture of chaos. You may wonder what this is. What this is the change of direction of traffic in Sweden on the 22nd of September 1969. Sweden were all driving on the left-hand side of the road, and the government decided that it was better if everybody started driving on the other side of the road, so on the right-hand side of the road. And they took 2 full years to prepare the audience, to prepare drivers for this reality. So they took 2 years of campaigning and advertisements and TV ads and whatever they did. Radio played a major part in familiarizing people with the upcoming change in legislation. And this is what happened on the 22nd of September, when actually the direction of traffic changed. And you can see people pointing with their bonnets their headlights in the wrong direction, and others are in the right direction. And this is exactly how tax policy changes very often materialize and pan out. It is quite chaotic in the beginning because it is incredibly difficult. And let's talk a little bit about why it's difficult, but also what is really happening. So what we are looking at is a data revolution from self-assessing businesses in any economy, where it is up to the taxpayer to determine and to report how much VAT, how much indirect tax they believe they owe the government, or in other circumstances, how much the government owes them, to a situation where the government finds the truth, finds that information in the transactions itself. If you think about it, if a government deploys a government portal that allows that government to see every transaction between businesses in that country very much upfront, they don't need the business to self-assess. They don't need that business to report. They can actually see it themselves. And that leads to a number of capabilities that governments really didn't have before. For instance, it may be that a tax office spots a very suspicious transaction. What they can then do is to immediately trigger an unannounced audit, or also known as a spot audit, something you weren't expecting to happen, and all of a sudden, the tax office or tax detectives show up on your doorstep wanting to see your books, triggered by a suspicious transaction in the clearance model, somewhere in the government portal. But probably more detrimental, if you wish, or more threatening, is the idea of pre-filled tax returns, of which Christian will talk quite a bit more in a few slides. But what that basically means that the government is not waiting for you to report your VAT status. They actually know what your VAT status is and will show to you what the information is that they have available. And what that means is if you don't have your house in order, if you do not have visibility of the same information that the government has visibility of, you have no line of defense in case you don't agree with what the government is supposing or is proposing that your pre-filled tax return looks like. And that's really important, and I know that Christian will talk quite a bit more about this today. But these capabilities, these situations are behind the macro situation I described earlier, and why governments are going this way. They do not want to be dependent on individual businesses telling them what they believe their VAT exposure is. If you look at then at, if you look at a map like, or if you look at the direction of travel of countries that are moving into Prefilled, moving into CTC, continuous transaction controls, or we also call them mandates, and I use them interchangeably, is that where in the past, a few years ago, we were looking at one, maybe two countries doing this at the same time in a year. Quite manageable, very different implementations, but in a way manageable. We're now looking at the situation where many countries are announcing mandates and announcing dates in a year at the same time. So we're looking at simultaneous implementations of 5 or 6 countries in any old year, which of course, if you're a business trading in many of these countries or multiple of these countries, you're looking at change, dramatic change in each and every one of them. And you will need to find a way to implement in time. Now, while that is already challenging in itself, what we are also seeing is that governments keep changing deadlines. They also keep changing their scope, they keep changing their requirements as they learn more. And that, of course, is very difficult to deal with. And with that, you absolutely need help. And that's also why we're here on this webinar today. Another way of looking at it, if you look at a map, is that probably highlights this even a bit better. If you compare 2022 to 2030, you will see that even in 2022, 3 years ago, there was already a good number of countries that had gone down the path of a CTC or had announcements in place or were in transition to do so. But we believe that by 2030, which is not really that far away, only 5 years away, there will be a large number of countries, and pretty much all of the globe will have adopted technology to allow them to see and track and see invoices in real time as they are being exchanged with between buyers and suppliers. And that obviously drives dramatic change. This may be a little bit exaggerated. Probably not all countries will have done it by 2030, but we really should brace ourselves for very draconic change, because this is unstoppable, unavoidable. Now, in a sense, it isn't so bad, because if you look at it, okay, governments are trying to improve their VAT position or their indirect tax position. They're trying to improve collection. All these things make sense. And I don't think that the issue is necessarily in the idea or in that it is happening, but it's more into how it's happening. And how it's happening means that we need to look at least 4 different pillars of choices that governments can make. And every government, every tax authority in a country is obviously free to choose the C2C model that they want to implement. But also they are free to choose whichever invoice format they'd like to see in their country, and how invoices need to be exchanged between suppliers and buyers and the government, but also between suppliers and buyers themselves. There are multiple different invoice distribution methods that might apply. And then there's also the question about how do you prove authenticity and integrity, tamper-proof, and how do you archive invoices and retain invoices over a longer period of time. And as you can see, there are many choices that tax authorities and governments can make, simply because these are, let's say, alternatives or options available to them, and they will pick and choose whatever works best at their individual situation, or whatever they understand best, or whatever they think works best for them. But for businesses, this leads to, I would say, almost a roller coaster of tens of thousands of different permutations that might apply to any country or across multiple countries that go live with their mandates. I don't know of any 2 countries that have implemented their CTC, their mandate, in exactly the same way as another country. Some of them look alike, are very similar, like for instance, in Latin America, the majority of the mandates you see out there are very similar. But if you go under the hood, if you look in detail, they're actually different enough to warrant different projects in each country. The same goes for even PEPL, where we believe everything is the same, but actually, if you go under the hood, things are distinctly different. So again, we are looking at, as I said, a roller coaster of many different types of implementations that are very difficult to adhere to. Now, with that, I believe Susie has a poll question for us that will identify how you feel about this. So Susie, over to you.
Thank you so much, Ruud. So where are you with your e-invoicing program today? Would you say that you're live and you're pretty happy? Would you say that you're live but you're having some issues? Would you say that you're not live but you've selected an e-invoicing partner? Maybe you're not live and you've not selected an e-invoicing partner as yet, or are you looking to manage this in-house, or you're managing it in-house today? So please just tick the one box that relates to your situation. Where are you with your e-invoicing program today? You're live and pretty happy, live but having issues. You're not live yet, but you have actually selected a partner to work with. You're not live and you haven't selected a partner as yet, or maybe you're looking to manage this, or you are managing this today in-house. If you haven't already responded, please do so. Closing the poll in 3, 2, 1. Thank you for participating. Let's close the poll and share the results with you now, coming up on your screen. So you can see that just shy of 20% of you are live and you're pretty happy. So congratulations to you. That's a great place to be in. And 26% of you are live, but you're having issues. Another 26% of you are live, are not live rather, and you've selected an e-invoicing partner. 19% not live, haven't yet selected an e-invoicing partner, and 12% of you are looking to manage this, or you are managing this today yourselves in-house. Interesting results. Any comments on that as I pass back to you, please, Ruud?
I would say not necessarily unexpected. It's interesting to see that quite a number of people are actually live and are happy. But we know that the announcements of future mandates are basically have obviously been made since quite some time with Poland and France, for instance. I think typically what people do is they wait for quite a while to see if perhaps the mandate will get postponed, which happens often. It's a very natural reaction. So it's not uncommon for businesses to start looking right now. It's also unfortunately the case that in early implementations you may actually encounter some issues. So we're here to help. So if you feel that we might be able to help you, let us know. But it's something that we see more often, Susie. So, and thank you all for answering that poll question.
Thank you, Ruud.
So I spoke earlier about that almost like that palette of choice that tax authorities and governments have, and even in Europe. There are no two identical implementations of electronic invoicing. If you compare France to Poland to Italy to Belgium to what Croatia will implement on the 1st of January 2026, you see very diverse implementations of e-invoicing and in some cases also electronic reporting. And people are asking sometimes, well, how about Europe then? Why is Europe not harmonizing? Well, there's only so much Europe can do. And what we do know, and what we have seen earlier this year, is that Europe launched a directive, agreed on a directive called ViDA, VAT in the digital age. That's what ViDA stands for. The ViDA is basically three main pillars of activity, or three main pillars of legislation. From right to left, the single VAT registration, a platform economy, which clarifies very clearly which party is responsible to pay VAT if a transaction has been facilitated through a platform, like for instance Uber, or perhaps Booking.com, or Airbnb, who pays that VAT. But probably the most impactful, the most intrusive element of the ViDA legislation is the digital reporting requirements, also known as DRR. And we'll take a closer look at what that is. But of course, what Europe is trying to do here is to improve collection, to avoid fraud, and also to simplify administrative burden on businesses, which of course are very noble principles. And from what we can see, this is exactly what ViDA is set out to do. Let's first look at the timelines, because that's a question we get very often. Companies saying to us, "Well, so we can wait until 2030 before we need to do anything," and that's actually not really true, because ViDA is already in force today. No, the DRR requirements, so the digital reporting requirements, do not go live until 2030. We'll talk about that in a second. But already today, there is no need anymore within the European Union, so with all the member states, for a buyer, an invoice recipient, for instance, to agree to receive electronic invoices. If these invoices are compliant with the European norm, they don't have to consent. The supplier can simply send these, and that's something that we've already seen in Germany, where this has been laid down in law. Also, local governments and tax authorities do not need to ask for approval anymore from the European Commission to deploy a national e-invoicing mandate. They can simply do it. However, there are rules. They can't just implement any mandate they want, but they do not need to wait for approval anymore. And actually, because Europe is moving to the digital reporting requirements, we now see European countries rush to implement their own mandates very quickly, because they need to somehow have e-invoicing working in their country by 2030. And that doesn't really leave a lot of time. Now, what is DRR? DRR is, and we'll get to a bit more detail in a second, but DRR is typically about cross-border invoices within the European Union. So between two member states. So taxpayers, for instance, in the Netherlands sending invoices to a business in Germany is a cross-border invoice, and that invoice needs to be electronic and also needs to be reported electronically. That is what ViDA DRR is set out to do. But before I go into any more detail, Susie has another poll question for you. So over to your question, Susie, and then we'll go into detail.
Thank you, Ruud. So do you know how you need to prepare for ViDA? Would you say yes, we're fully aware and we have a project team running with it? Would you say yes, but you haven't yet started looking into it? Or would you say no, we're not really fully aware of what we need to do to be prepared and we need help? And please reach out. So closing the poll, let's leave that one open a little bit longer. Do you know how you need to be prepared for ViDA? So you say yes, fully aware, and have a project team running with it, or yes, but we haven't yet started looking at it just yet, or no, we need more help. Closing the poll in 3, 2, 1. Let's have a look at the results coming up on your screen now. 45% of you say that you're fully aware and you've got your project team in place and you're running with it successfully. 55% of you say yes, you do know what you need to do to be prepared, but you haven't started looking into it. None of you say that you need help at this stage. So that's positive. Back to you, please, Ruud.
Yeah, positive, and it's good to see that you're all aware and that you know what you need to do. I'll go in a bit more detail on the digital reporting requirements then. It basically means that each invoice that is exchanged between two member states, so again, we're talking cross-border, not domestic invoices, need to be reported to the tax authority in the countries, but also the tax authorities then need to make sure that these invoices are reported to let's say, a central database. So it's a very staggered process. But also in theory, or actually in practice, this means that invoices need to be electronic. So these cross-border invoices need to be electronic. And this is the reason why so many member states are currently rushing to implement their e-invoicing mandate for domestic invoices, because it's going to be very difficult to have a situation where cross-border invoices need to be electronic and domestic invoices do not need to be. That doesn't really abide by, let's say, the principle of trying to reduce administrative burden. So that's why this is happening. Of course, this is going to be very impactful. We haven't seen local legislation about this. There's still negotiations ongoing about how this needs to look, but it's good to see that you're all aware that this is going to happen and that you need to prepare for this. But this is going to come, and this is going to be a major deviation from where we have before. And of course, it raises all sorts of fundamental questions. Like, if we haven't done that, do we now need to make local, the domestic electronic invoicing mandatory? What are those requirements for electronic reporting then? And to which extent are we going to impose specific capability or specific procedures or specific connections in a country where this has been free up to now? It's very difficult. And also, actually, a question I am asked very often, to which extent is this an opportunity? And that's an important question. But the first and foremost capability that you need to have, going back to that slide where we had all these different pillars of choices that governments can make and tax authorities can make with regards to file formats, with regards to submission methods, with regards to authenticity, integrity, and archiving, and the model that they will use is that you will have to have the capability of sending, receiving, and processing any invoice in any format as you send and receive them. Because if you're looking at doing business in multiple countries that all have different mandates, different models, different file formats, different submission methods, it's going to be incredibly difficult to do that yourself. And I saw some comments earlier about we are managing compliance in-house. That may over time actually prove quite difficult. And I would strongly recommend that if you're not doing that, that you seek a partner that can actually do this, that can actually make sure that they can handle any invoice in any country, depending, regardless of how that invoice is shared and what format that invoice is in. There's another way of looking at this. If you look at government connections per se, you're looking at basically this situation: different government connections with different models, with different connection methods in and out, and that leads to that basically say an attack on your IT budget. This is not where you want to be spending your time or your money or your energy. This is not what businesses do for a living. Businesses do very different things, and where you need to be is a situation where you harmonize this into one solution that takes care of that all, which, as you know, I hasten to say, something that obviously Tungsten Automation offers in the shape of our solution called Invoice Agility. And what that does is exactly what I was saying earlier. It allows you to rely on a single connection in and out of government in order to ensure that you do not need to deal with all the variations that tax offices come up with, but you leave it up to a single solution. And Susie, I think you have another question.
I do indeed. So what is in scope for you for e-invoicing? Is it a single country that's not yet live, a single country that is live today, a cluster of European countries, the whole of Europe pretty much, or would you say Europe and beyond? So you have a global scope. So what is in scope for you and your e-invoicing roadmap today? A single country that's not yet live, a single country that is live, a cluster of European countries, pretty much the whole of Europe, or would you say beyond? Do you have a global scope? Closing the poll in 3, 2, 1. Let's have a look at the results now coming up on your screen. So you can see a significant majority of you have global scope. Back to you, please, Ruud.
Interesting, and it's good to see that there are so many companies actually having a global scope, and this is the reality out there. Because many businesses do actually transact across border and very often very globally. Now, I've spoken very extensively about compliance, and of course I would, because I'm a tax guy, but I'm acutely aware that this is not the reason to exist for businesses. Businesses exist to create value, to compete, to grow, and create value for their customers, for their shareholders, for staff, partners. And every company I know is somewhere on a journey to basically improve their business, to improve their competitive position. Now, what I'm seeing in the market, and I think Christian is seeing exactly the same thing, is that we have many competitors and many colleagues in the market who very strongly focus on compliance and will help you comply. And while I'll underwrite immediately that is of supreme importance, without compliance, you do not exist. Actually, you need to be able to marry your compliance with another universe, which is called survival, efficiency. So without compliance, you don't exist. But with efficiency, without creating value, without creating growth with your organization, you can't survive, you can't compete. And to bring these two together is actually very difficult. And what I'm seeing in the market a lot is a situation where, in RFPs, but also in commercial cycles, and many companies ask that a single provider does everything. moving from AP to AR to transactional reporting, periodic reporting, filing, and determination. While all of these things need to be done, don't get me wrong, all of these things need to be done. I don't think it can be done by a single company. That will be a unicorn, and I think unicorns are magical animals. This is why we're here with Sovos. This is why Christian was on the call together with me, because we know and we have experienced that we can't do everything. Tungsten Automation is very good at invoice automation. We're very good at e-invoicing. We're very good at format ingestion and driving straight through processing, so real automation. But Sovos are really good at connecting to governments and are extremely good at determination and filing and analytics. And together, we offer a solution that will get our customers exactly where they need to be. We will service those needs that come with compliance requirements in all these different countries that are currently rolling out their mandates. But alone, I know we couldn't. Together, we are a very, very strong force. To hand over to Christian, let me go back to the slide I mentioned earlier, because I did say something about pre-filled tax returns. And that's also one of the reasons why we're here today. So we've spoken about ViDA, we've spoken about global mandates and why they happen. And I'm now going to hand over to Christian to take you through the reasoning and the reality around pre-filled tax returns and how you can handle those. Christian, over to you, please.
Thanks, Ruud. And I hope everybody can hear me just fine. For the remaining time, we'll go a little bit further into what's actually happening on the tax administration side. And I was going to start out by saying, Ruud, as we both know, 90% of the job of being in the compliance business, particularly in the compliance software business, is trying to understand what the future has in store, because this is all about ensuring our customers against the often unknown events in the future. I always say, compliance today with the rules as they are today is really not that difficult. What is difficult is anticipating what will happen next. So the next slide, I have to have just a little bit of fun with all of this in terms of what governments are have in store for us as to the things they can do with transactional data. And I often talk about on stages about how it isn't just tax administrations, but of course many other parts of public administrations that want to use this data as well. And one of the things you can imagine, and I know people are currently working on these kinds of things, is to use a neural network model or approach to transactions, right? So you can look at different processes within a business transaction between a supplier and a buyer and start to see correlations between individual steps between those, and then put those on a neural network so that you can, as a tax administration or any other part of the public administration, start to see correlations, and you can quickly start to see also anomalies to a level of granularity that I think most businesses today probably don't fully see. It's really quite amazing if you think about the information that comes maybe from the financial system. It might be coming from banks, from customs authorities, etc. Images that might have been scanned at the customs entry, invoices, purchase orders, transport documents, and other documentation that increasingly the tax administration will peruse and sometimes pre-approve in real time. You really can get to a level of detail whereby ultimately any type of anomaly based on any micro step in all of this data processing not adding up may become the reason for the tax administration to give you a call. And this is why often we talk about the great reversal. All of this means when the tax administration goes down this path, and they will, is that the tax administration will be watching you in real time. And this slide, I love the picture here, is the picture of an audit screen of an auditor in Brazil who can see the company here in the middle, if it's not too small on your screen, being monitored in real time and visualizing every single transaction that is in flight between their suppliers and buyers, with the red circles flashing up if there's any kind of anomaly that has been found through data triangulation. So not only are you being watched, you're being watched on a level whereby so many different things that you or your trading partners have done in the past or are doing at present are being added up, compared, contrasted, and the moment that something flashes up, you might get a phone call. This is what Ruud called spot audits earlier, right? This is no longer about an audit, which is a big event, and you might get a couple of weeks notice, and then you open your books, and this might actually be about an in-flight invoice that you might, I don't know, might not even have received yet, but your trading partners might have made a mistake, and the tax administration might have questions about that. This great reversal then feeds into which is the theme of this webinar, which is pre-filled returns, because of course the moment the tax administration has such deep insights into your data in real time and can interact with it, it isn't just seeing data, but being able to stop transactions. In many countries, where particularly where we have this clearance methodology where the tax administration has to pre-approve transactions, the interaction with many stages of a transaction before the trading partners can take it further becomes a real topic. It's a level of intrusion that we're not used to in the business community so far. The other thing that Ruud mentioned, and this is nicely, I think, captured in the slide we're looking at right now, is that no two countries are the same. And this matrix is a simplified version of a matrix that Ruud and I and quite a few other business and government sort of experts have collaborated on over the last couple of years within the Inter-American Center for Tax Administrations. I'm not going to go into the detail, but it's really to say, when you add up all of this complexity from all of these mandates across different types of reporting, real-time, periodic, and also things like standard audit file for tax, and the constant change of these mandates, because this never stands still, you get to an incredible level of complexity. If you want to sort of boil that down to the kinds of things you need to do on a high level, is that you need to make sure that you have a really good and cohesive strategy across kind of these three main pillars. The first one being continuous transaction controls and electronic invoicing. The second one, all things that I think of as the declarative space, and we'll get back to that, how that is changing. Thirdly, things like safety and e-accounting. We might touch on that with a few examples later on as well. And then, of course, across that, determination. But not only that, increasingly, it becomes important to make sure that all of the software and processes and people and organizations and controls we have in place across all of these different types of reporting mandates and e-invoicing mandates, that data goes to a single central place where you can keep what we call mirror visibility. Ruud hinted at it earlier, where you can see the same thing the tax administration sees, apply the same kinds of controls, and actually anticipate some of these things that the tax administration will be doing with the data. What's very important then is that if you kind of take a step back and you think about your business and the different vendors you're using across those categories, so transactions, declarations, periodic returns of different kinds, and e-audit, the way to kind of think about this is, historically businesses have approached this as just sending data that they didn't think was necessarily related very much, and therefore these different vendors will be sending it to the tax administration without much coordination at all in different data structures at different times. The tax administration, of course, is asking for this data for the simple reason that it is all different control points throughout the entire business process of the exact same business operations with your trading partners, which ultimately leads to the debits and credits and inputs and outputs in tax. Right? So if you continue to look at these pillars of tax as independent and not related to each other, with vendors who can't talk to each other because they probably don't even know of each other's existence in your ecosystem, it becomes close to impossible for you to deal with these spot audits that I demonstrated earlier, or to have a good response to pre-filled returns. You might just end up in a situation where you just accept what the tax administration tells you. What happens then next, if we look at the real topic on the agenda, which is pre-filled tax returns? While a lot of things are happening, and I suspect, actually know from practical discussions, that this pre-filled tax return kind of landscape, the bigger picture, what tax administrations are up to and how they are going about the gradual introduction of pre-filled VAT returns, is not something businesses talk about enough at the moment. It's kind of slowly coming to them. I apologize. It's kind of slowly coming to them. And I have to say, this to me is a macro topic that we believe, at least, is going to become an issue that many businesses will struggle with if they're not well prepared. So different types of returns, different types of information sources. It is much more than just about e-invoicing data that is used to pre-fill VAT returns. There's many different types of electronic data that is being used to pre-fill many different types of tax returns, period. So in the next couple of slides, we have provided some just high-level information of examples of countries that are already on this journey. 2 comments about that. This webinar doesn't give us enough time to go into the detail for each of these. We'll walk through this and just highlight a few countries as examples. But I should say, as you read this, or if you listen to my selected examples, you'll quickly come to the conclusion that what Ruud said earlier about every country being different. That is true here as well. There's no, all of these countries are heading in the same direction because it's an obvious goal, right? To kind of turn the tables, flip the script on businesses so that you as a tax administration send the return and not the other way around, which has so many operational, legal, and other implications. It's also all different in every single country and keeps changing. So let's highlight a few countries. France is an interesting example. People might not know this today, but VAT returns are already being pre-filled in France today with customs information. And of course, the mandate that kicks in September 2026 will then be used very quickly, or at least that is the current plan, to pre-fill these returns with invoice information as well. To just highlight another country on this slide, again, I'm just selecting a few examples here. You'll have it in your kit. But Greece is, for those who are familiar with the My Data platform in Greece, again, to just demonstrate how right Ruud was in saying that no 2 countries are the same. That looks nothing like what's happening in France, not at all. In almost every detail, high level, micro level, it doesn't matter. But already in Greece today, VAT returns are being proposed to certain taxpayers based on data that is available from the mandatory My Data reporting system. And that has been the case, by the way, since December 2022. Let's move on a little bit and look at a few other countries then. I think India is an interesting one. So the GSTR 3B return, which is one of the mandatory monthly returns in India, is already being pre-filled. But in the case of India, the pre-filling happens on the basis of information sent to the tax administration by your suppliers. Yet again, a completely different approach to how VAT returns come into play and mature over time. I'm saying this again, it's all heading in the same direction, but it is there are structurally very different paths that every country takes towards this. Perhaps it's time for me to select one more. Just quickly, Italy is an interesting one. They have been pre-populating VAT returns and ledgers since 2021. Of course, the Italian e-invoicing mandate dates back to 2019. Data is sourced from the SDI, and it is available to certain groups of taxpayers as suggestions from the tax administration. So those were just a couple of selected countries. Again, the information is in your pack, and of course, Ruud and I can provide lots of other details and answer your questions on the individual countries, what's happening there, but also how that impacts you. If we then go back to what I was looking at earlier as just a high-level kind of picture, the right approach, we believe, to deal with and anticipate pre-filled returns as they mature in all of these and many other countries, because this was just a snapshot in time and of course just a set of examples. What we believe is that it is very important that your transactional compliance, your periodic compliance, and then your e-accounting and SAFT compliance all be bundled in such a way, or at least combined in such a way, that the data can easily be normalized and triangulated, and then the same kinds of controls can be applied to that for you within your own environment, or at least for your business, that the tax administration provides on this as well. So if you have that level of mirror visibility, you can answer these spot audits and you are still in control of your data. You have an answer if you disagree with the pre-filled return, because you've been able to anticipate that across these different reporting streams. So that was a quick conclusion on the agenda. The last item here, I'm just going to try and wrap this up. A couple of takeaways. The first one is I'm just reinforcing something you said earlier. There is no Swiss knife whereby all of a sudden, just because there are mandates, there are individual vendors that can help you with all of your AP automation, all of your AR automation, and all of your global compliance as a single company. People who tell you that are not telling you the truth. It is also very logical because these are, as we pointed out, very different domains, right? I mean, we at Sovos are compliance experts. We're almost 3,000 people. This is what we do every day, and we find it's pretty tough. It's a difficult thing to keep on top of this tsunami of legislation, all these different domains, and to make sure that we can strategically and tactically every day with all of these changes help of our customers, all of our customers. And of course, as Ruud said, Tungsten excels at automation, and business automation is a completely different field yet again. That is all about optimizing your business processes, removing friction, and increasing efficiency and trading partner happiness and all those kinds of things. So you really shouldn't try to bundle this all within the same company. Then you're definitely you'll end up getting the worst of both worlds. The best of both worlds is in the kinds of collaborations that you're seeing here between Tungsten and Sovos, for example, where there is a product-to-product collaboration based on a loose smart coupling and integration between these pieces. Wrapping up, really, key takeaways. The first one is open networks is an important one. Tax administrations are trying to remove the constraints of private networks and connect all of those private networks with each other through things like Peppol, so that every trading partner kind of is its own node on the network of networks and has more freedom and ability to independently exchange invoice data with their trading partners. You have to understand the impact of that on your business and benefit from it, because it is something definitely that businesses can benefit from. Loose coupling is something that I just mentioned. Make sure that you don't ask for one vendor to do absolutely everything. That is not realistic. Bundling all of those things in one vendor is just asking for getting none of these things right. It's really beneficial to think about this as kind of a composable enterprise, whereby compliance and automation are two expert domains that are pre-coupled with each other, work with each other, so in the background, so you can continue to automate your business processes, and don't let your strategy be led by compliance considerations only. Mirror visibility, just real quick, I've mentioned, if you use that as a design principle, as an objective, then ultimately you're going to be moving in the right direction to make sure that all of these different data declarations and data sharing in real time and clearance and all those things, and DRR, as we've mentioned in Europe, are well coordinated, and you can continue to stay in control of your data. But finally, of course, when all of this happens and you are in control of your data, think about that as a fantastic, very high quality, very detailed a bundle of data that you have insight into in real time, because you have to anyway, and then you can leverage that data for internal or external business purposes as well. With that, I'll pass it back on to Susie.
That's great. Thank you so much. We've got a good number of questions come through. If you haven't already posted your question through to me, please do so. And meanwhile, let me put up the final poll for the day, please. So what would you like to do next? Would you like to have a call or possible demo with Christian or Ruud or one of their team quite urgently within the next few weeks, maybe? Would you maybe like to do so in the next few months? Or would you like to sign up to the Tungsten e-invoicing compliance newsletter? Right, let's move through to questions. I'm going to leave that poll up for a bit. So one question for, I'll start with you, Ruud. If we work with Tungsten and Sovos, is it very clear as to which party is responsible for what activity?
That is a very, very good question, and thank you for asking that. It's maybe something that we should have said during the webinar today. Yes, that will be superbly clear. At the end of the day, you'll have one party taking full responsibility for the actions and hopefully no omissions of the other. You'll have typically one partner to work with. There are situations where we might actually serve you both, but it will be very, very clear who has what responsibilities, and who has what, let's say, what tasks on that tablet. So that's something that we've worked for years on to ensure that it's very clear what the, let's say, the exact areas of responsibilities are.
Great. And Christian, have you got anything to add to that?
No, Ruud said it perfectly. Maybe this, we've both said, think about automation and compliance as separate but connected domains. But my advice is, even though we're a compliance vendor, start your journey by thinking about automation, and compliance needs to be injected into that. Don't just start with compliance and then think about your business process as an afterthought. That's not the right order.
Yeah. Okay, that takes me on to another question that I've got here. So we're working with a tax company for compliance, but our straight-through processing is now compromised. What should we do?
So do you want to go first, Christian?
I'm trying to interpret the question because it's kind of open for different interpretations. If it means that you are currently outsourcing your creation and filing of periodic returns, what people often have called VAT compliance in VAT countries, with an external partner, and you need to move obviously towards continuous transaction controls, what you should do is ask your partner what their plans are to make sure that all of these things continue to hang together, and otherwise talk to vendors like Tungsten and Sovos to make sure that the transactional part of the journey can be done with quality, that you can automate your processes and stay in control of your declarative processes, your VAT return process as well. Okay,
great. And Ruud, anything else to add to that?
It goes back to what Christian said earlier. Think about, the first question to ask really is, why is your straight-through processing compromised? Because there may be a ton of reasons for that. It's not necessarily down to your tax partner, but there may be things that could be improved there. As Christian said, ensure that you understand what the plans are in countries that go down the path of very complex legislation, but also understand that why your straight-through processing isn't at the level where you want it to be, or where it even has been. And we have seen this before in specific areas where, yes, people comply, and this goes exactly to what I said earlier. Yes, there's compliance, but there is no automation. So we'd love to work with you to understand what drives your straight-through processing, and I'm sure that we can help with that, because that's what we do for a living.
Great, thank you. What is your view on what the UK will do next?
Again, a very, very good question. I think Christian will have an opinion about that too. We are in contact with HMRC. So we are speaking to HMRC. We've responded to their public consultation that closed earlier in May. There's been I would say not so much a declaration of intent from the Exchequer, but more a comment about, we know we are going to have to do this. This goes to what Christian said earlier. It's about predicting the future. So I'm going to try to reliably do that. But where we believe the UK are heading towards is not an Italian-style model, but rather a multi-corner type model, because that has already proven and will continue to prove the least intrusive. At the end of the day, UK has strong drivers to do this. It's not something that will be done overnight. And what I know is that UK and HMRC, but also Department for Business and Trade, are taking this very seriously, and as such, they're doing exactly the right thing. They're properly thinking this through and are in discussions with other tax authorities as well to see what works and what doesn't work. UK is a very large economy, and of course that needs to be approached carefully. I think I sort of understand which way they're going, but they will at some point implement an e-invoicing model that doesn't necessarily immediately lead to pre-filled tax returns or to a government platform, but over time will.
Great, thank you for that. So ladies and gentlemen, that takes us to the end of today's webinar, and please make a note of the webinars that we've coming up we have coming up in the next few weeks and months. We've got many that I'm sure would be of interest to you and your team. I'd like to express huge thanks to our speakers today, Ruud and Christian, and thank you for your time and attention today. And we look forward to welcoming you next time. Thank you so much and goodbye.